Welcome back to the channel. Today we're diving into the fascinating world of stock market investing with insights from Nicolas Darvas's classic book, How I Made 2 Million in the Stock Market. Now, the story behind this book is incredible. Nicolas Darvas was a dancer traveling the world when he started picking stocks and ended up making millions. Let's break down the key concepts that helped Darvas turn a modest investment into a substantial fortune. And I'll show you how you can apply his strategies in today's market. One of the most fascinating aspects of Darvas's approach is his use of what came to be known as the Darvas box. Essentially, this was his secret weapon for identifying stocks that were about to make big moves. See, Darvas wasn't just picking stocks randomly. He was looking for stocks that were showing signs of strength, stocks that were already moving up. He would track these stocks carefully, watching how they traded day after day. As the stock price fluctuated, he'd identify these key price levels where the stock would sort of pause or consolidate. This is where he would draw his box. The top of the box would be around the recent highs of the stock, and the bottom of the box would be near the recent lows. The idea was that the stock was essentially trading within this range, like it was trapped inside the box, and that's where things get interesting. Darvas believed that when a stock finally broke out of this box, it was a powerful signal. It meant that the buyers were really starting to take control, and the stock was ready to move significantly higher. So what did he do? He bought it. He'd wait for that breakout moment, that surge of momentum, and then he'd jump in. But here's the critical part. He also protected himself. He would place a stop-loss order just below the bottom of the box. This way, if the stock didn't move as expected and drop below his box, he would automatically get out, limiting his potential losses. This is where so many people go wrong in the stock market. They let their emotions get the best of them. They get greedy when a stock is going up and they hold on for too long. Or they get scared when the market takes a dip and they sell everything at a loss. But Darvas was different. He knew that the key to success in the stock market was to have a plan and stick to it, no matter what. He didn't let his emotions cloud his judgment. He didn't chase after every hot stock tip, and he didn't panic when things got volatile. That's the thing about the market. It's always going to be unpredictable in the short term. You can't control what's going to happen tomorrow or next week. But what you can control is your own actions. You can control how you react to the market's ups and downs. This is where discipline comes in. It's about having the mental fortitude to stick to your strategy, even when it's tough, even when you're feeling uncertain. Remember, Darvas was a dancer. He was traveling all over the place, but he still managed to make millions in the stock market. How? Because he had a system and he was disciplined enough to follow it. Darvas understood that investing in the stock market involves inherent risks. Even if you're following a proven strategy and doing your research, there's always a chance that a trade won't go your way. That's just the nature of the beast. But here's the thing. You don't have to let those risks ruin you. You don't have to gamble your entire life savings away on a single trade. The key is to manage your risk effectively, and that's where Darvas's approach really shines. Remember the stop-loss orders we talked about earlier? That's risk management in action. By setting those stop-loss orders just below his buy-in price, Darvas was essentially saying, okay, I'm willing to risk this much money on this trade, but no more this way. And if the stock went against him, his losses were limited. He was protected from a catastrophic loss. Now, I know what some of you might be thinking, but Graham, won't I miss out on potential profits if I use stop-loss orders? And yeah, it's true, you might miss out on some small gains. But here's the thing, protecting your capital is more important than squeezing out every last penny of profit. The stock market is a marathon, not a sprint. It's about staying in the game for the long haul, and that means managing your risk effectively. Chapter 4, the role of research. Find the hidden gems. Let me tell you, Darvas didn't just pick stocks out of a hat. He wasn't just throwing darts at a wall and hoping something would stick. He put in the work. He took the time to understand the companies he was investing in. See, Darvas believed in this idea of fundamental analysis. He looked for companies that were growing, companies that had strong earnings, companies that were in industries that were on the rise. He wanted to invest in businesses that had real potential, businesses that were poised for success. But that wasn't all. He also paid attention to the technicals. He looked at charts. He studied price movements. He wanted to see how the market was reacting to these companies, how the stock prices were behaving. And that's where his darvas box strategy came into play. He was looking for stocks that were showing signs of strength, stocks that were breaking out, stocks that were indicating that something big was about to happen. Chapter 5, Psychology of Investing. Keep your head cool. You know, the stock market is a funny thing. It can make even the most rational person act a little crazy sometimes. You see those big green candles on your screen, and you start feeling invincible. You start thinking you're the Wolf of Wall Street, ready to conquer the world. But then, just as quickly, the market can turn against you. Those green candles turn red, and suddenly you're staring at a sea of losses. Your heart starts racing. Your palms get sweaty. You're tempted to hit that sell button and just get out before things get any worse. But here's the thing. That's exactly what you shouldn't do. See, the stock market is a game of emotions. It's designed to make you act irrationally, to make you buy high and sell low. But Darvas knew this. He understood that the key to success was to stay calm, to keep your head cool, even when everyone else was losing theirs. He didn't let the market's volatility get to him. He didn't let fear or greed dictate his decisions. He stuck to his plan. He trusted his system. Chapter 6. Automate your investing. Make money while you sleep. Here's the thing. Darvas wasn't glued to his computer screen all day, every day. He wasn't constantly watching every tick of the market. Remember, he was a dancer. He had a life. He was traveling the world, performing on stage, living his best life. So how did he manage to make millions in the stock market while still enjoying his freedom? The answer is simple. He automated his approach. See, Darvas understood that one of the keys to success in the stock market is to not overcomplicate things. You don't need to be a financial genius. You don't need to spend hours every day poring over spreadsheets and charts. What you need is a simple, effective system that you can stick to, and that's exactly what he created. He developed a set of rules, a system for identifying and trading stocks that was so clear, so concise that he could literally automate it. He could set it up and let it run even while he was off dancing the night away. Outro. Now go make millions. And there you have it. The key concepts from Nicolas Darvas' How I Made 2 Million in the Stock Market. Remember to do your own research, invest responsibly, and never risk more than you can afford to lose. If you found this breakdown helpful, make sure to like, subscribe, and hit the notification bell for more insightful content. Until next time, happy investing.